Hello everyone and welcome back to Crypto Coach. In today's video I want to share with you where we are at with Bitcoin's price and the crypto markets, as well as what we can expect in the near future. Let's dive right in. Bitcoin's price fell below $19,000 for the first time since December 2020, as mounting evidence of intensifying stress within the cryptocurrency industry was juxtaposed against a backdrop of monetary tightening, which caused the market to become more volatile. According to data provided by Bloomberg, the most valuable digital token by market value experienced a record-breaking 12 consecutive daily decline on Saturday, falling as much as 9.2% to a price of $18,740. After surpassing $1,000, the price of Ether dropped almost 11% to $975, which is the lowest price it has been since January 2021. The two cryptocurrencies that are seen as the market's leading indicators have both dropped by more than 70% from their respective all-time highs, which were reached in early November. Global macro uncertainty combined with spectacular blow-ups in the crypto ecosystem has caused prices to fall at a rate that has surprised investors, said Kunal Goel, a research analyst at Messari. The combination of these two factors has caused prices to fall at a rate that has surprised investors. The most recent leg of the decline sent Bitcoin's price below $19,511, the all-time high that the coin reached during its most recent bull cycle in 2017, which it attained toward the end of that year. Bitcoin's price has never fallen to a level lower than the previous cycle's peak in the roughly 12 years that it has been traded. Every token that was being tracked by Bloomberg's cryptocurrency monitor was trading in the negative, showing that investor sentiment had spread to other cryptocurrencies as a result of Bitcoin's decline. On Saturday, the value of privacy tokens such as Monero and Zcash dropped by as much as 11%, while Cardano, Solana, Dogecoin, and Polkadot all experienced losses of between 8.3% and 12% over the course of 24 hours. The combination of negative news cycles and increased interest rates has been extremely detrimental to riskier assets, such as cryptocurrency. On June 15, the Federal Reserve increased its key interest rate by 0.75 of a percentage point. This marked the largest increase in the rate since it was first implemented in 1994. Central bankers have signaled that they will continue to hike rates aggressively throughout this year, in an effort to bring inflation under control. Alkesh Shah, head of crypto and digital asset strategy at Bank of America Corp, said in a note on Friday, "Investors are continuing to position defensively following last year's bull market in digital assets. Removing the sector's froth may be unpleasant, but it is probably for the best as investors shift their focus to projects with clear roadmaps to cash flow and profitability, rather than purely revenue growth." The failure of the Terra blockchain 1 month ago signaled the beginning of broader signs of stress, which have been exacerbated this week by the decision of cryptocurrency lender Celsius Network Limited to temporarily halt withdrawals. An additional lender, Babel Finance, followed in the footsteps of Celsius on Friday, adding fuel to the fire after crypto hedge fund 3 Arrows Capital announced it had suffered significant losses and was contemplating a bailout or the sale of its assets. According to the research firm Glassnode, even long-term holders who have held off on selling up until now are feeling the pressure to sell. Tium Han, the chief executive of a Hong Kong-based crypto investment firm called Satori Research, stated that after Celsius, the focus over the past few days has been on 3 Arrow Capital and Babel Finance. Su Zhu, the founder of 3AC, appears to have vanished without a trace after allegedly incurring enormous losses as a result of this round's massive decline in the value of cryptocurrencies. Stablecoins, which are a type of cryptocurrency asset that is pegged to the value of a fiat currency like the US dollar, have also been experiencing difficulty. According to Bank of America's Shah, who charted net outflows in 8 of the 10 weeks prior, the top 4 stablecoins experienced exchange net outflows last week that were 4.5 times larger than the prior week. Stablecoins are frequently used by crypto traders as a means of moving funds around the ecosystem without the need to convert them into traditional currencies. As a result, consistent outflows are an indication that investors continue to be cautious. According to Mike McGlone, an analyst for Bloomberg Intelligence, historical data show that Bitcoin may find key support around that mark as previous sell-offs demonstrate, where the token typically finds points of resilience. This is despite the fact that the key $20,000 level has been breached. In a note he published on Wednesday, he predicted that Bitcoin could build a base around $20,000, as it did about $5,000 in 2018 to 2019 and $300 in 2014 to 2015. The maturing digital store of value is characterized by declining volatility and increasing prices, says the author. The cryptocurrency market is currently at a fraction of the heights it reached in late 2021, when Bitcoin traded near $69,000 and traders poured cash into various types of speculative investments. According to pricing data compiled by CoinGecko, the total market cap of all cryptocurrencies was approximately $870 billion on Saturday. This number is significantly lower than the $3 trillion it was in November. If you enjoyed this video, please like and subscribe to the channel so you never miss another video. Thank you.